Good afternoon, everyone, and welcome. It is Friday, March 6th, 2026. It's Trading Trends with John Salama, CMT. Boy, it's an interesting day. There are some things going on as usual, but payroll number came out this morning. Good, not too good, the job number. Let me just go to the sheet and we'll look at all the important charts of the day, the week, and the year, actually. So the total portfolio is exceptionally light. Richard Dennis typically in times like these, and we're going to take a look, went into commodities. And this one of the things that's not giving me warm fuzzies about the market is the only thing that's up is strictly commodities. Corn, wheat, obviously oil with a massive breakout. U.S. oil at 5-year highs, Brent oil at 10-year highs. Let's take a look at what's happening today. Banks really under the knife here, and we'll take a look at the charts. This is crash type behavior with what you're seeing here. When everything is lower, vol ripping, they're absolutely selling first and asking questions later. Should be a little bit concerned. I was happy to be a little bit lighter in the portfolio, but banks, real estate, and small cap, absolutely. I had the round to be down around 2%. We'll see. Some are down further. Oil and vol, the trading continues just exploding to the upside. It's just oil and vol. That's the only thing that's up. They're not even clinging to safe havens like the gold and the silver anymore. There's been a massive deleveraging globally. And when you zoom out on the week, 25%, that's approximate, pop this week in oil and vol. So sometimes when you do get the headline, you can do the obvious. If you saw that we had Iranian strikes over the weekend, and the first thing you did by Monday morning was buy oil and vol, that suited you very well. And then also, Salama did predict this. Unfortunately, he didn't act on it until it was a little bit too late. A 17% massive drop, catastrophic in South Korea. We alluded to this last Friday, I believe, in the video, or last Wednesday. And I think people probably thought I was psychotic. And we got the move, and it was actually more. So South Korea, unfortunately, got a little bit too hungover, a little bit drunk. And folks wanted to deleverage out of all of tech. Although we'll see a little bit, like I said, in the crash behavior. We'll just go through the charts. I let the charts talk for itself. Let's do it. All right, so intraday tape. Let me see here. Boopity boopity bop. No, I don't want to do that. Share screen. Dashboard panel. Let's go. All right. The intraday tape. We'll take that in a second. SPY down 1%. I'm talking to you live. Tesla down 1.5%. Nvidia down 1.25% or so. IBM getting hammered. We'll take a look at that chart in the small caps. Micron down 3, going opposite from the strength in Broadcom up 2, and a massive move in Marvell up 22%, but still not enough to really pull tech and the stocks. Qs were doing okay, holding their own earlier, and now down to 90 bips. Reminder, Qs are up 24% year over year. That's 2% a month, last I checked. Obviously, the momentum not there today. Palantir up 3%, Amazon down 2%, Apple down 1.25%, Meta down 2.25%. I'm in XLC right now, very close to a stop, but still in it. GLD up 1% before it was down a little bit, and HYG struggling. That is not a good move. They are being very picky and selling high yield credit here in the States. A little bit of credit tightening. That's what I'm saying. I don't like what we're seeing out of the internals here. There looks like a little bit of a credit issue propping up. I saw some more layoffs out of Oracle to support, the data center strength. The job number today, it looks like Pandora is out of the box with 4.5% unemployment with revisions lower. The U.S. story doesn't look so great. There are absolutely other, and then of course the war. I would really, be focusing on domestic policy here with the unemployment that is going to be creeping. It's going to get uglier in the summer, and then by Christmas, I think you're going to be looking at something north of, we'll see 5%. It's very hard to put the toothpaste back in the tube, but enough of the cocktail macro talk. Let's get into the tape, which is what I do best. All right, so here is the open. Things looked okay. It held VWAP, and then we basically had that resistance of 676. And then batting down now. VWAP on the day is 673.60. I'm talking to you live right now, and that is where we are trading essentially, and that is down 1.15%. The market trying to find this stasis here, but it's not looking pretty on the short term, down 1.1. We'll look at Russell in a bit later. It looks much bloodier. So here's the thing. I know I said Wednesday, next Wednesday, I was looking for approximate all-time highs. So 2 things about this, and I think a wise person, once they see data, and if you just stick to it, you could be stubborn. So what do you do when you get new information? I tend to change what the shift and the focus is. You can't be anchored to your narrative. So this is going to sound bipolar, and it's because the market kind of is. So we've been saying, this is pretty important here, in terms of sentiment, in terms of investor valuation, in terms of cash flows for these companies, in terms of earnings season being out of the way, in terms of financials breaking down, which is what we're going to get to. This market has to stay tethered close to 686. I've been saying that. Right now, we're 673 half. It looks like an ugly flush down 1.25%. I got it. There's a very good chance with this weakness here that we do visit this 656, that 200-day moving average. That's about 3%-ish from here. It probably feel like a crash because you'll start to get that 200-day moving average start to flatten out, and it could be a little bit cause for concern. This is the important thing. There's been horrendous news. The block layoff last week really kind of soured sentiment. Of course, the war, all this. And yet we are still above a rising 200-day moving average with that cement-like wall of support at 670. Super important. The problem is we're $4 away from that support. So there's many interesting things going on here in terms of the dynamics. You were 3% away. It's almost like a toss-up. You're 3% away from a test of the 290 moving average, at which point, if that happens, the valuation and the sentiment and the exuberance of investors stateside is absolutely waning, and they're shopping in other malls, if you will, across the globe. Okay, so Germany, Australia, there's many other commodity-linked, nations that will deserve investor dollars better than here at the U.S. because especially with the COPX from these heightened Mag 7 and etc., it just doesn't give warm fuzzies if you're trying to deploy fresh capital. So there's a possibility, and the Qs will be your signal here. You'll be your lead if it tests the 200-day moving average first, I believe. I don't think it'll come first from the index. But so far, we're in a big rectangle here, as I've said, basically since Halloween, between, we'll just round, 700 and about 650. Everyone's saying, this is going to break one way or the other. Should I also, so we're going back here, should this break 656? It's all about levels, it's all risk management, and all Bayesian probabilities here, okay, and path dependency. The most important thing here is if we do break 655, I do believe we will head to 635. It'll feel very ugly. Those are levels first approached here at the end of July. It's going to feel very, very ugly should we slip to about those 8-month lows. It is a possibility, and you should be, potentially positioning for that. However, should we hold? This afternoon is very important. I want to see if people want to go hold on to risk into the weekend, or is more things going on where, there's attacks in Beirut and Israel and Iran. You got to really pay attention to this. And if some sort of statements come out from China, etc., and this support breaks under 670, this is binary to me. We're going to 655. Break 655, we're going to 635. Should we hold 670? I do believe we will make that move again towards 686. If you're tethered around 686 and you start to see vol slip on either this afternoon or Monday, Tuesday, I do believe there is still a chance, just due to the resilience of the market and climbing this wall of worry, we do still get to about that 702 mark. It sounds insane, but possibly like in a week or two. That's what the charts look like if this support holds, this very important support of 670. If you see a flush day at 3 o'clock to 4 o'clock, that important power hour, and traders or clients are telling their wealth managers, get me out of this. I don't want to go long SPY going into Monday morning. You're going to see this flush. If they say no, I believe in the American story, you're going to see that propel higher and VIX sell off. So be paying attention to that 3 and 4 o'clock. It is going to be super important. Of course, Monday, Tuesday, early of next week. That's SPY. Let's get into the internals because there is much going on. Let's see what they're raising up today. This is absolutely amazing. Oil is the most overbought since I was a kid during the Kuwait War. Okay, USO up 12% today. We'll get to the weekly move. Today, oil's up 12%. The turtles unfortunately screwed me on this, and this is one of the problems when you have a system. You follow it, pretty blindly. You don't want to be right. You want to follow the system, and I'm sure you traders out there have this, same difficulty in, discipline. That 89 RSI is, like I said, the most overbought since the Kuwaiti War. So this is a legit war, of course. This has been green every single day since February 25th. So yes, and that was before the strike. So the smart money always, can kind of predict the future here. Massively overbought. A 90 RSI is staggering. Look at this candle. Doesn't tell me it's done yet. View up on the day is 105.34. It's holding that by $3. They sent it to 110, and it's just off by $2 there, up 12%. A massive move. Oil is going up. This is hurting airlines, which we'll get to. It's obviously hurting cruise liners because oil is not free right here, and it's over $80 a barrel. It will start to infect Americans' wallets should it happen. Should this continue and go up again on Monday, you're going to pay north of $3 in some parts of the country on Monday, somewhat next week. And I know Trump was saying gas prices should be down very fast. I don't think people are believing his bluff here, as we are, like I said, 5-year highs in U.S. oil, 10-year highs in Brent. In terms of the technical picture, I mean, this is absolutely nosebleed territory. This reminds me of South Korea before. You need some kind of de-escalation, of course, but this fully targeted right here, honestly, $93, $95. This is absolutely nosebleed territory. 14% in a day oil, that's insane. So if you wanted to chase it, you can. The ATR is 430. I'm rounding. You can get in right here. If it drops $8.60, pretty easy. If it drops to par or 100, fixed income speak bond. If it goes from 108 to 100, get out, because chances are it is going to mean revert probably back to $83, $85 level. Wait for that and then get a better entry. But if you want to chase it right here and there's more mass explosions over the weekend, go for it. You can go to 120. There's, people buy first and ask questions later when it's 89 RSI. This is like Metallica, Foo Fighters, and Taylor Swift playing your basement. Okay, they're just going to pay up. That's a very rare opportunity. That's just an amazing opportunity. Should it continue? And again, one last thing here: the money flow on oil has been really spectacular since December 1st. I'm looking at those orders at the end of the close, and typically right around here, it was still struggling with the 200 moving average, and really a nice breakaway after January 22nd. Oil never really looked back. I mean, this really looked great, and I'm doing that through RSI holding above the neutral level of 50, and actually did that after the first week of January, and really up into the races. No reason not to be in oil, honestly, or at least some oil correlated business like XLE, XOP, DBC, etc., which we'll get to as of the end of January. So if you enjoy those gains at around the $74, which has been for basically the entire past year, you're up a clean, 25, 30%, much of it coming in the last week. So that's oil. Be careful of a mean reversion down to like 85, as I said. In terms of plays, you'd be insane, I think, to just buy just straight up calls here, because the vol is absolutely pumped up. I wouldn't want to sell calls either, of course, because that's a suicide mission, laying down to pick up pennies while you're going to get steamrolled by a machine. This one's tough. Like I said, probably the best trade if you had to is get in. Be careful, though, and just use that stop. It's super volatile with a 4 ATR. That's insane. The average ATR is about 2.3 if I'm going on the 20-day average on the ATR. So that's this line here, the yellow versus the blue. Absolutely, in the past week, this is doubled its ATR. It's absolutely insane. This is the other thing I don't like about crash behavior. The only other thing that's up today, we'll get away from oil, and this is the diversified commodity basket. This isn't like just straight up gold, silver. This is wheat, corn, soybeans. They're focusing a little bit again on the Russia-Ukraine war, and a little bit of overlays I've been playing with this. This doesn't look good. This smart money also was sniffing this out. This has been green every day since February 18th, minus 1 day when it was down 5 bips. So I'm going to count that as an update too. And then it's been above 50 RSI again since a breakaway, really a clean and breakaway above this rising 200 moving average. And once it got this, I always say a breakout above a former area plus overbought. There's no looking back. This one gave you a little bit of an oopsie because it had that level of 14, sent it all the way to 15.20, shocked it all the way right back down to 13.90, back to 14.5. 14, and boom, 1630 today. A massive day today for commodities. If you look at soybeans, wheat, corn, stuff you can't AI, and stuff that's you're going to need regardless if unemployment goes to 10%. These things are going just one way north. Overbought. 81 RSI. It's only happened 2 other times this year. Does look like a top right here. If you wanted to chase it, this is again just a $15, $16 ETF. So be careful. The vol has also, the ATR has risen. Just a crazy chart. You can get in and chase it right here. I'd be careful though. You're basically the 2 ATR is 60 cents. So if you get in right here, by all means, if it goes down to 1570, get out, because there's a very good chance it's headed back to around 1480, and then let that be your setup. So again, a lot of these, when the momentum's just straight and up and away, really the only thing you could do is do the breakout system or the breakdown system. We'll look at the lows coming up. If any of those are valid candidates, I'll give you the same rules. But be careful with options here. Right-size your positions, of course. But with the vol, what it's doing, I think there's more opportunities, honestly, in stock. But you can do stuff, of course, in options as well. Speaking of vol, we'll get to it right here. And this is what makes me, the hair on the back of my neck stick out a little bit. I was happy to be a little bit light in the turtles as recommended is vol is breaking out here. It's still under a 200-day moving average, but I don't like what we're seeing. We are at highs versus Thanksgiving. So not really great here. I thought vol was going to continue to sell off. It's up 6% today. Got to keep an eye on how this closes by 4 o'clock. View up on the day is 33.11. It's approaching it, but still up a massive 6%. What I don't want to see here is VXX put this new floor in around $28. I don't want to see that. Then you're in an elevated environment. It's absolutely going to put a lid on, stateside domestic beta here. You're not going to have things going up really in SPY. It's going to be going. Otherwise, you're going to have more of a flight to the dollar. It's just not going to be fun to play, anything in the U.S. You're going to go otherwise, and that's fine. That's why we're traders. That's a-okay. But be careful here. I don't want to see 28 be the new floor for VXX. Okay, and in terms of resistance, should this break above 36.5, we're in trouble. That if this gets over 36.5. You will have the S&P go under 655. That is directly correlated. So be on the lookout for that. Other traders look at UVXY, which you can do as well. I like VXX. And this is approaching overbought. It hasn't done that since Liberation Day. Okay, so be careful. That was 11, bloody months ago. And back then, VXX was back a ridiculous 85 handle. So the market is absolutely jittery right here. Okay, a massive up 6% move on VXX. This thing, as I said, is back at levels that was back at end of November. So you're basically looking at 4-month highs here in volatility. Be careful. Should it take out 36? I don't like it's gonna spell for the market. What are they selling? There's a lot of point of pain here today. Number one, the banks. I don't like what we're seeing here. Typically, what they sell first, it has to do a little bit more than this under the 200 moving average. It did it here. November, again, correlation with November, we were just saying with vol, with banks. Same thing, 2 weeks before the NASDAQ peaked. Same thing here, end of July, early August. And then here was really still getting its legs underneath it at the end of June after Liberation Day. But typically, financials lead markets lower in times of crisis. You saw in 2008, you saw in 2020 during COVID, when things really look ugly, people sell the banks because it's not it's just not a good environment. And right here, they are selling the crapola out of the banks. This peaked the banks on February 9th at nearly $68. You had a swoon here to 59. I was on this program saying, don't want to short the financials because I think they'll hold here. That was the wrong move, and that's part of the problem. Again, when you have a system like the GOAT, Richard Dennis says, you got a 1-month low or 3-month low, you take it, you sell. On 1-month high or 3-month high, you buy it. That was not the right call. Is that 200 moving average? Look at this doji right here today. The 200 moving average, this is amazing. It's 59.25. It got to 58.18 today. VWAP is 59 even. It's 59.35 today. A huge tell for me will be, can the banks get off the mat? I do not want to see banks more than 3 days. If the KBE, this is going to be simple. If KBE is under the 200-day moving average for 3 days, look out, because there's other things that we talked about. It's probably going to happen. SPY 655 and VXX 36.5, you can mark it. Should it hold, though, should it hold this 59.25, the market should rebound. Maybe not so quite all-time highs, but it'll probably equate the previous highs in SPY 698. All right, number 2, looks like people with the payroll number, if you're getting let go, and I think it's the bloodiest time for layoffs since 2020, I believe, probably not going to buy houses. So real estate, an ugly day. That's a multiple sigma move here, down 1.2%. This group peaked just very recently, IYR. Real estate 102 peaked literally 4 days ago. They're selling it off aggressively today, down 1.2%. That's a pretty decent move for real estate, and rates are moving a little bit. The mortgage REITs are really getting hammered today. Again, I want the dust to settle. It did pick itself up off the mat a little bit. The low today was 98.5. Nice 40-cent bounce above that. VWAP is 98.90. It's above that by a bit. I would love to see this cut its losses, help restore some, my gosh, I know you want to say exuberance, animal spirits, but maybe even confidence in quotes in the market. This needs a little bit more time, like just a little bit. I would say a couple of sessions, like maybe 2 days. This has to hold this for sure, this $96 level. I don't think that's in jeopardy. I'm interested to see if it holds this $99 level. That's going to be very important. Should it not hold this, to be honest, 99 to 99.25, I do think it's probably going to about 97. I think it holds, though. I like what I'm seeing in terms of it getting off the floor at 98.5. But again, it's going to be really important to see trading between 3 and 4 o'clock. Get your afternoon coffees. It's going to be interesting. Volume, I believe, will also pick up here. And then the next one, wow, I got this one wrong. I got to tell you when I'm right, and I'll tell you when I'm wrong. Small caps, I thought it was a decent setup here due to, the movement away in terms of exposure in software. Well, energy stocks are not ripping, and financials are getting clobbered. So that's going to absolutely hammer Russell. That has very little exposure to software, which actually had a dead cat bounce this week and was the third best area this week. So IWM down 1.9% today. This needs a little bit of time to clear, basically correlated with what we just said about real estate in a sense, in terms of I want to see this hold. This doesn't look great either in that we are 2-month lows in Russell. That's not really a thing that algos scan for strength. It typically is the opposite way. VWAP on the day is 253.17. It is below that by about 1%. So not looking good at all, down 2% Russell. They were hammering this. I want to see this hold. The 200-day obviously has to hold at 239. This has a nicer slope than the S&P, but they have not really been interested in owning Russell for the month of March. It's been under 50 RSI for the short period in March, about a week and a half or so, going back into the end of February, actually. Ugly candle. Oh, man. The cement wall support, if you will, for Russell is 245 to that 248 area. It has to hold there. Again, look at the close today. It's going to be very, very telling. Should it hold all the correlate stuff I just talked about before, then I do think this just absolutely like leapfrogs to 262. But you need to have that strength in the financials and in energy stocks. They're just going to oil. I'm long XLE. It's not doing crap. Okay. USO is up 14% today. XLE is nothing. It's like kissing your sister. Okay. Top 3 gainers of the past 5 days. How would you have absolutely dominated this week trading? I'm not going to kick a dead horse on this, but it's pretty obvious. U to the S to the O, up 31% in the past 5 days. That's insane. Up an average of 6% a day. Today, 2x. Hence why I said if you want, and it holds VWAP at 330, which is 105, you probably can chase this. Have your wide stop. 2 is pretty wide, honestly, for $8.60 move to the downside. Sometimes the great Richard Dennis would say 1.5 ATR. So you could have a $6 move. So if it drops to 102, get out because it's probably going to 83, 85, and there's some kind of resolution overseas. But for right now, number 1, not even close. Oil next. Number 2, volatility itself up about half that. So if you were saying, oh, the world's going to freak out more than oil's going to rise, you were wrong, but you still got a great gainer. We also had, we just did this in the other chart, so I'm not going to kick a dead horse on it. But vol up 17% over the past 5 days, or an average of 3+%. That is also 2x the short-term trend. So if you want to do VXX, and be careful buying VXX calls, you can buy the stock, but also understand where the resistance is short-term. ATR on this is 205. If you wanted to chase it, let's apply the same rules, 1.5 ATR. It's about $3. So you can get in. If it goes to 30.5, get out because it's probably going to 28.5. All right. And you save yourself the difference. Otherwise, you might be able to enjoy that rally. And if you get in, it might very well go to 36.5 and then fail. Give you one of those nat gas meerkat-like moves where it does an oopsie here. It touches 36.60. Everyone thinks the world is ending, and then it starts to swoon. But again, really going to pay attention in the afternoon trading. I'm going to say it again and again. And then, of course, early next week. The market will break one way or the other. We are at a inflection point, and that's why I'm happy to be light right here. Very choppy. Everything making highs. Oil, commodities, wheat, soybeans, lows. We'll take a look right here, actually. Oh, one more. This is what I don't like about the crash level behavior. I don't like this kind of rotation into weakness. So they were getting to Bitcoin. That didn't give me warm fuzzies. They were going to IGV. That's like late cycle behavior when you go into, the early superstar performers. Don't really love that behavior, especially when just commodities and vol is ripping. So all that, like I said, the phrase is not giving me warm fuzzies. I do think, all that being said, though, look at this nice little doge you have here today on IGV, which is up in this massacre today. Well, not really a massacre unless you're really just long a lot of small caps and financials. But this looks like it has a little bit more to go. I think this actually wants to, hit its head here. on that 50-day moving average, right around 90.70, which is around another $3. It'll definitely catch people off guard. And I think it'll fail there. I think it'll stop. 200-day moving average still rolling over. Immense heavy overhead resistance at 105. Not even thinking about that right now, but I do think this has a little bit more to go. So if you're long software, congrats. It's above the 50 RSI for the first time in 2026, first time since the week before Christmas. So it's actually catching a bid. Massive volume here. This has been a focus since the end of January, massively, even though it was breaking down in the early January. And again, 52-week low on this guy came February 24th at 76. You've had a bounce here to 88. I think you got another $2, $3, and then I'd get out. At that point, I probably want to sell calls, to be honest, and IGV. I think it'll pay. But again, I want to see it coincide with a market top. And then that would be a trade that I'd be potentially interested in doing. Or you can buy those maybe like the June 79 puts, because I don't think the worst is over for software. All right, top 3 losers of the past 5 days. I called this one. Unfortunately, I was long, but I got out and with small loss, and I took profits along the way. EWY, this is very important. Up 1.5% today, down 17% over the past 5 days, or 3% a day. I'm not going to tap myself on the shoulder too much on here because at the end of the day, I didn't get out at the optimal time. I still think this needs a little bit of time. What I said here, let me check my notes. Boom, boom, bang, bang, bang. Right here, the day before the all-time high in COSPI here, on February 25th, we were touching 140, 149, 150 to be exact. And I said this should and could drop to 130 and it would be healthy. What happened was the next day it went to 154, gave me a nice little FU, although I was long, so I enjoyed it. And then what happened was not only did it not go to 130, it went to 123 yesterday, and now it's 121, half the low, and then they're having a nice little hammer dig in here. What's very important to me is KOSPI, South Korea index, has spent very little time this year under the 50 RSI. I want to see how quickly it reclaims it. It's had a volume breakout as of the last 2 weeks. I've been trading this since last year. Now, the world is aware of it. Be careful here. I absolutely need, obviously, 200 moving average is all here, 89.5. So we got super extended. This was like a degen market. Hi. I do think 120 holds. It was good to see that 123 here, and these are long wicks here at the bottom. Lets me know it's not really, great price discovery. In terms of 125 is really where the floor is, not here. But I don't like seeing it swoon lower and lower after we had those nice, up days. So let's see what happens today. Again, it's going to be a very important afternoon and early next week. I'm still a believer in South Korea. Don't forget, this is very heavy AI memory, Samsung and Hynix, 40% of the index. Give this a little bit of time. I do think similar to S&P straddling that 688 mark, and that's really important. This has to get back to 133, 134 level to really instill confidence. I think it gets there because this is one of the strongest stock market in the world. Outside of Israel, I believe, but Israel's a lot less volume than EWY, so it's more liquid here. And that's pretty much it for South Korea. I have to buy basically the turtle say on a 1 month breakout, so I'll wait for that to happen when it happens. But I do think this has to hold 134 to instill some confidence in South Korean investors and American investors in this product. Okay. That was the biggest loser this week. Reversal of trend, down an average of 3% a day today, reversing that by about half contraction, right? Up 1.5%. Next one, and we'll use this to resemble kinds of silver miners, gold miner juniors, silver junior miners, copper miners, what we're going to look at here. This was down 16%. Also, I got out of GDXJ. That was unfortunate. It was the number 3 winner year over year. Massive gains. I was excited to get in. And that's why you can never get too high, never get too low when you're following a system. It was not the time for it, unfortunately. COPX is the poster child here this week, down just as much as South Korea. This is what we're talking about. They're deleveraging out of many, many high risers and pretty much everything. That's why you have a lot of blood red on your screen, outside of software being marginally higher. COPX down 16% over the past 5 days, or average of 3%. Today, basically in line with that. Doesn't look good. Does not look good. The copper miners, of course, copper, global growth. You need it to build things. I don't think people are really super bullish about global growth right here, right now, when you have wars and weak payrolls, etc. What you're going to want to see here, I think this is a no touch personally for about 2 weeks. I want the dust to settle. This has to correct in time versus price for me. I don't think it's done enough yet. I want to stay out of this for about 2 weeks. I want that 78 floor to hold. And then I actually rather buy into strength should this leapfrog into $88, and then I'd rather participate. So the 78 floor here must hold. We're getting pretty close. It's $2 away. Those were the high. $78 struck first in mid-Jan. And then after that, I do want to see it move to its 21-day exponential moving average. This thing's a volatile group. I'm talking about a 10% rise. It can do it. It's down 16% over the past 5 days. Again, still in trend here. And not much else to say. Under 50 RSI for the past 3 days, which has not happened since the week before Thanksgiving. So absolute weakness in copper miners short term. And of course, when you have $80+ oil, airlines don't have a fun time because it costs a lot of money to put gasolina and oil and jet fuel into your big airplane. So this has fell under the 200 moving average. This is what I don't want to see in SPY, but of course, this is American, Delta, United. They're getting absolutely slammed with costs. But, you know, it's discretionary. You have to look at things like this. They've been selling, obviously, jets every single day since the war started because this is not helpful to them. Europe travel is down. People are not going to Dubai. It's just not a great backdrop for jets. The 200 moving average is 25.84. You're underneath that by about 60 cents or 3%. This thing has been down 12% over the past 5 days. Today, upping that trend from about 2% and change average to 3.3. I truly thought the 26.5 was going to hold. I think I was actually talking about this chart on Monday. I said, let the dust settle on this as well. I thought this was going to hold here, 26.5, right there where my cursor is. It had that nice little candle on the 3rd, 3 days ago, and then boom, plunging yesterday down 4.5%, and today down 3%. Direct victim of oil soaring 13%. It absolutely hammers this group single-handedly. Let this have some time to settle. There's going to be exactly inversely correlated to oil. If oil spikes further and we get to, whatever on the, 110 on USO or whatever it is at this point, you're going to see this break further. It's, disappointing to see the support break here at 25.80. We'll see if this is an oopsie. But again, this is oversold for the first time since there were, domestic concerns about, airline travel and all that since Liberation Day, going back to April, about 11 months ago. 200 moving average hopefully does not turn into resistance, but this has not been above 55 RSI since the week of the 52-week highs last month. So not really great in jets as well, down an average about 2% a day. Today, upping that trend down 3%. Woo! Okay, let's keep going here. Really quickly, top 3 trades in the past 5 days. If you saw the headlines and you said, we're at war with Iran, and you bought oil, shorted South Korea, and went long vol, congratulations. Someone's going to give you your own hedge fund because you absolutely slammed the market out of over 5,000 ETFs, 1X ETFs. All right, this is very important. This has more gravitas than usual, in my opinion. This is the top 3 trades of the past 52 weeks. Are things really changing? Are 200-day moving averages being broken? Are new highs being implemented? Let's see. The number 1 gainer of the past year, since last March 6th, 2025 through today, is SILJ, your junior silver miners. This, looks like it's in the rear view here a little bit. This peaked January 26th at $41. Of course, it's correlated to silver. Duh. These are the junior miners to absolutely risk on. It's a leverage play on the actual metal. I was super excited to get in the GDXJ. It was a short-term top here that looked like a good candle, and then they were selling it off ever since. They're deleveraging with the uncertainty of war. I saw some headlines saying this could last until September instead of Trump saying it's going to be over very fast. Market doesn't like that kind of uncertainty, obviously. This similar to the copper miners, obviously, since they are metal miners. Give this 2 weeks. Just walk out of the room and give it 2 weeks. I'd obviously want to see this straddle to $36, which is the 21-day exponential moving average. It's showing some weakness here. This is up 204% year over year, okay? 204%. I'm looking at it from back here when we were at $11 stock, and now it's still up a triple here, okay? Up 204%. Let this one go for a little bit. I think they could pull this down as low as 31. Actually, as low as 30. So let me put that cursor here. I think it could break that support here that we put in February 5th. It was at 30.5. I think you could go just a little bit lower. I still think the story is intact, though. That has a beautiful rising 200-day moving average, similar to my thought on Korea. We'll look at that because it's number 3 teaser. But I don't like buying things when it's under 50 RSI. It lets me know the sellers are in control. I want to get above neutral. I want to have that, almost animal spirits in terms of a superstar like this, and you're not seeing it right here. Again, it's been kicking SPY's butt since April. Not even close. The Chaikin money flow, those important orders from 3 to 4 o'clock, has looked just nothing but green since mid-May. Things look overall, decent, but this needs a time correction, and I think they could hammer it as low as 30. I'd rather buy into strength, though, once it pierces from below the 36 level. And in terms of when this could see new highs again, early April, mid-April, something around April. And for me, my target, I still don't think 40 is out of line. Again, the previous high was 41. I think it'll come within a rock's throw away. This is your number 1 gainer year over year. I don't think they're going to pull the ripcord and say, let's start all over with a brand new playbook. They're still going to like it. Number 2, and I was in this, unfortunately, this is how things work sometimes, the junior gold miners. So very similar to the SILJ. This is the junior gold miners, leverage play on gold, operating leverage, everything's from within, looking at the capital efficiencies of the companies. So GDXJ up 0.5% today. I had gotten stopped out. This just hit highs. It was one of the reasons why I had confidence in it, of course. March 2nd, just 4 short days ago, hit 157. Unfortunately, my CMT hat said that is going to be my near target. I probably should have taken some off, but the great Richard Dennis in the turtle system does not take profits until the trend breaks, which happened then, and then I got out. This is the same thing, similar to copper miners, silver miners. When I was talking to you before, so this is a good example. I said, this is going to start perking up around Super Bowl weekend, because the chart to me looked so clean then. I said, get ready for about a 15-day hold, or on or around, what was the Monday after the Super Bowl? Right here, the 9th. So 15 days from there is about the 24th. Look at that, the high on March 2nd, just 6 days later. And then here we are now. Let this thing cool off. I don't want to be in here just right now. I think they could pull this thing down to, I don't think this is in jeopardy, the 200 moving average at $97. I think you're fine there. I think they could take this down to about 121 to match that February 5th low. But again, I'd rather buy into strength when it pierces 141 from below. So let's see here. That's your number 2 gainer of the year, up 165%. And then lastly, your number 3. I think these themes will continue to be the story this year. Your metals and your South Korea. Same thing. I don't want to kick a dead horse on this, but let this thing, base. I think this one needs less time than the miners, for example, but be careful. Look at the candle here. Potentially they take it down to 118, 119 if more bad headlines come out. Again, it costs South Korea a lot to get oil now imported. In addition, we haven't heard some things about North Korea in a while. So there's just geopolitical worries all over the place. I want to give this a little bit of time to cool off. I like that it's bucking the trend. This is up 130% year over year, which is crazy for a geographical ETF. Crazy. This isn't junior miners. This is South Korea, but it's a degen culture over there, so everyone's leveraged to their eyeballs, it seems. Let this hold 134. I'm not a believer back in the South Korea story until it holds 134. So if it comes Monday, Tuesday, Wednesday, what have you, cool. Let it break from there. Start to get this to curl higher. Get that 20-day moving average higher, and it closes above it, and then that's going to be your confirmation for strength. All right, so that is all. Good luck out there. It is a crazy, crazy place. Be careful. Look for those trades from 3 to 4 o'clock. Going to be super, super duper important. Peace.